Hi, good afternoon, everyone. What an exciting topic and very pertinent so much. And I'm loving the diversity of views that we would have in the panel in the conversation. Just to set the stage, last couple of years, in spite of probably some setback in the middle during COVID, probably 3 to 4 years have been a bull run, especially for consumers, where there were a fair bit of segments who are not getting across MSMEs to retail, who are still getting left out in the mainstream credit landscape. Digitization, fintechs, NBFCs, and the line has blurred so much. It is tough to say where fintechs start and where banks or NBFCs will end. Had played an important role. I was part of the conversation with Civil Trans Union earlier. We could see a lot of new to credit has come through this fintech NBFC partnerships. So it's critical to take stock of what has been achieved, what are the learnings, what are the challenges, what do you want to do differently as we move forward. So with that opening remarks, I will invite opening remarks and quick intro from everyone. Mr. Shetty, if I start with you, any opening remarks on our topic today, which is smart lending, transforming the NBFCs?
Thank you, Vivek, and also thanks to ET platform for giving this opportunity to me. While I'm not really a player in the direct sense in NBFC, of course, we have a very significant interest in the NBFCs, being a largest lender to the NBFC sector. And it's very important for us that what kind of investments are made by these NBFCs and what kind of digital lending adoption which the NBFCs are doing. To that extent, I take keen interest in terms of what they're doing. It's not only their asset quality, in terms of the digitization and the digital adoption at the NBFCs is extremely critical for a bank like SBI. The second piece I would like to state that, yes, in terms of the digital lending adoption, NBFCs have done fairly well. As you said, I think there have been a series of collaborations which the NBFCs are undertaking with the fintechs. But they also have to remember that if all of us are looking at the personal lending space, essentially the consumer lending space, they are going to have tough competition coming from the incumbent banks. Because the large scale investments which the incumbent banks are going to make, and also with the ability of their the large database on the customer, and also the trust element which they have, I think they are going to be giving a great competition. So the future lies in how the three significant players in the ecosystem, that is banks, NBFCs, and fintechs, collaborate so that the ultimate beneficiary would be the customer. And in the process, the ecosystem gets benefited. I think this is, ideally, should be the focus of our discussion.
Great point, Mr. Petty. Great starting points. Food for thought for everyone. Shachin, I bring you in. Your point of view.
Yeah, so Vivek, as you know, that we are a dedicated small business or MSME financing player. And I think so. We were born at a point of time around 4 years back with this belief that the MSME financing in India is at the on the inflection point of a transformation. Historically, if you look at consumer financing, have already reached a very high level of digitization and data analytics driven underwriting. And that's what I think so Mr. Shetty is very right, that incumbent bank actually can take a large pie and share over there. But when it comes to the MSME financing, it has been generally believed that this is a brick and mortar business wherein the data doesn't play a massive role. I think that what we believe that in next 3 years, MSME financing in India would reach to level of consumer financing because of the power of the data, which we call data tripod of GST, banking and bureau, and massive digitization on the ecosystem, which is required for underwriting a customer. So smart lending has two components. One is what we call the heart and soul, and second is the body. And both is getting digitized. Heart and soul is the power of the data, which helps underwriting, and technology is the layer of simplifying the process, onboarding the customer, giving credit and process itself. And both is actually at a massive chain. The last piece of that, which is whether you call it fintech and NBFC, it's very difficult to define who is what. But eventually, the biggest constraint or hurdle for NBFC is that source of financing. right? Because we have to take money from someone and give money to someone. And that also, I'm of a firm believer that there is a massive change happening. Generally, people have a very less, or less view about co-lending as an opportunity. But I'm of the firm belief, and I've put my neck out saying that next year, FY23, roughly around 30,000 crore of MSME financing in India would happen through co-lending between banks and NBFC. And this is where banks would benefit from what we are doing, and we'll benefit from banks, very strong liability franchise.
Very interesting trends, Sachin. Arun, your thoughts?
Yeah, thanks, Vivek, and good afternoon to everyone. Uh, so we at NeoGrowth, we are a SME focused digital lender, and what we've seen is that over the last few years there has been a category creation by many players. So we are focused on building a small business lending around digital payments. So what we have seen is that each of the players have sharply defined their segments. They have sharply defined the segments and they verticalize their approach. And the point which Shachindra was making around data and all the availability of funds for the NBFCs to grow and the potential partnership, I think all those points are valid. And what we see is that we see the next few years of strong growth in the SME lending space. First, because of the innovation in the model, and second is what we see is the information asymmetry in this space is going to come down, and lending will become a lot more predictive, and credit losses and the pricing will become a lot more rational.
Thanks, Arun. Again, a good dimension to think about from a pricing and segmentation perspective. Harsh, you've been in this space for a long time. How have you seen the trend grow, and how would you describe the status quo?
Sure. So thanks, Vivek, and thanks to ETBFSI for inviting us on this exciting panel discussion. I think, Vivek, I agree to Setty sir and what Sachin sir basically said, right? The idea is that in this decade, we all want to cater to a largest population, whether we call it missing middle or bottom of the pyramid, right? If you look at the evolution from 2000 to 2010, we had largest of the banks having CASA, cost of funds lower, and customers with them who were serving when people had to go to branches. I think 2010 to 20, basically, we all had a newer set of people, Bajaj, Tata, Birlas, all of those coming in. The number of kind of products increased. The branches were not exactly the only mode of communication. It went to the dealerships, it went to supply chain, a lot more new products happened. So I think maybe 0 to 10, basically we were trying to cater to 5-7% of the country's population. Bureaus were not there. 10 to 20, it moved to almost 15-20% of the country's top population. I think this decade, all of us are striving to now serve rest almost 60-65%, taking it to 80-85% of the people, right, and population for all of it. And I think collaboration is going to be the superlative key for that, right? We all bring in our own strengths. The strengths could be in terms of digital onboarding, where the strengths could be in form of alternative underwriting and everything, right? So that's one aspect. I think collaboration will be the key. And like Sachin sir said, I think finally we all deploy depositors' money, right? We have a fiduciary duty to depositors so that we deploy it in a rightful fashion and overall do that in a proper fashion and deliver money back to them again. And our organizations as well, which earn overall. So I think in this way, every institution, the largest of the banks have their own capabilities, the fintechs and NBFCs have their own capabilities. One more point to add here is in this decade, Vivek, we are also seeing 3 trends, right? That will basically affect financial services. The first trend we are seeing is a lot is moving to cloud and digital native, right? So all the organizations, whether it be incumbent banks, whether it be NBFCs or fintechs, you may classify them separately, but all of them are moving towards cloud and digital native, right? Because the competition now is not exactly from maybe HDFC to Axis or Axis to Bajaj or Bajaj to maybe NeoGrowth or LendingKart. The competition is between a Flipkart, Amazon, Navi, Cred, and Ola, Uber, and everyone, which are the internet startups of the world, right? And that's the kind of population we are all trying to cater to make sense out of data. So first trend is cloud and digital native. The second trend, basically, Vivek, turns up from the fact that we as a team personally believe that personalization of service, right, will be very important. For the financial services, for the longest time, we didn't have personalization of services, right? loan products were kind of categorized very in the sense that for an auto loan, you have a standard structure. For a car loan or a home loan, you have a very standard structure, FOIR, income structures and everything. That personalization, and second is along with personalization, miniaturization, right? Or reduction in size, basically, as we call it, or micro miniaturization of products will have to happen for us to reach to the 80-85% of the population, right? Overall, that is all gonna only happen with data, right? And that's kind of with data specialist job. Third trend, like we have realized, is experience and engagement will also make a lot of difference in this decade, right? So I think for the longest time, we all have fought wars only on pricing or tenor or a particular aspect of product. Now, future, if it's going to be cloud and digital native, a lot more of it will be fought on experience and engagement with the customer. How much data do you have? And because see, we will have players like Google Pay who might be interacting 3 times a day with the customer, to a bank or people like us who might be interacting once a month, right, for collecting an EMI. So the experience and engagement will definitely be a very, very large player. And I think that's where a lot of us will bring in a lot of characteristics which we have inbuilt as our institutions, and collaboration could yield wonderful results finally, as Setty sir said, for the consumer, right? The idea will be that if we can deliver best of the products, personalized products in best form and fashion with best experience and engagement for the customer, that will yield and grow the ecosystem. It's a bit longish answer, Vivek, but yeah, that's our thoughts on ecosystem.
Many phenomenal. I think a lot of highlights there. One is setting up the ambition in terms of scale, 80-85% of the population. Then really one technology would have to be an enabler, so cloud and digital native.
Yes.
Plus, I think talking about miniaturization, product customization experience, there's a whole lot there, Harsh. I think a lot of them are critical. Nija, it sets up for you quite well. We would be glad to hear about the cloud and digital natives. What would be your opening remarks?
Yeah, thank you for having me, and thanks to all the panelists in the audience for joining us today. Indeed, I would like to build on what Harsh said. Cloud is indeed becoming the new normal, even in financial services. And most of the demand or most of the move to the cloud is driven by customer needs. More and more customers are going digital. So in terms of adoption trends that I see across NBFCs, and you correctly pointed out, Harsh, across banks as well as fintechs. You named some of the larger NBFCs, Bajaj Finserv or Aditya Birla Capital, who have been early adopters of AWS. But most of the trends can be divided into 3 buckets, or three buckets where cloud is a massive enabler. The first one is obviously going digital. The second one is modernization. And when I talk about modernization, I'm talking about modernizing the entire loan lifecycle, right, from onboarding down to collections. And the third trend I see is more collaboration trend, which is centered around open APIs and open banking. And I'm in a unique position because in my role, I cover Asia Pacific, Hong Kong, as well as Taiwan. So I'm fortunate enough, to witness these new smart modes of lending that are coming across multiple markets. And these 3 themes are common across all these 3 markets. And, you can think about cloud native digital banks such as WeLab, who went to gain a digital license in Hong Kong. But prior to that, they started off as a online lender for unsecured loans. They use services like Amazon Recognition to identify and categorize their documents, uploaded app, which fast tracks the KYC process for them. Even regulators increasingly are promoting more and more utilization of cloud adoption, or OK in with the 2025 plan, which creates enablers for multi-finance companies, which are counterparts of NBFCs in Indonesia market. So definitely very excited for the segment to actually leverage cloud as an enabler. And as you correctly pointed out, all the panelists, to serve the next consumer segment, which is still unbanked or unbanked. Hi, Vivek.
Thanks, Nija.
I'll pause there.
Yeah. Thanks, Nija. Good coverage, and we'll probably double click on some of the regional learnings as we move along. I wanted to go deeper into the topic of collaboration versus competition, which I think got set up in the opening remarks quite well. Mr. Shetty, you could see that as banks and NBFCs are becoming D2C oriented, there would be certain spaces where there would be a lot of competition, and there could be other spaces where there could be collaboration. And cloud and APIs and open data rails could probably be the enablers. But let's understand these nuances a little better than at a very broad brushstroke level. Again, if I go with the same flow, Mr. Shetty, your views on how would you nuance the, like, two-part question probably to everyone. One is what are the nuances of this competition versus collaboration, and secondly, what would be needed from either party or probably from a regulator to facilitate this?
I think for a large incumbent bank, the biggest challenge in the way they develop the solutions and the time taken to market. I think this is the biggest challenge. The legacy banks. I don't call them legacy banks, but I think the large incumbent banks. So there are a host of reasons for that. One is, of course, in terms of the security, in terms of in terms of the regulations. While the whole ecosystem directionally moving towards facilitating the adoption of all these technologies, we still have a challenge in terms of, I think Nirja really rightly mentioned, in terms of it's not only about cloud adoption alone. I think that comes later. How do you reimagine your journeys? The way you deliver the products is itself is a big challenge, because these banks have adopted to a certain systems of doing things. So it is the biggest challenge for both for the incumbent bank and the large NBFCs. And I'm sure these large NBFCs are like banks only in India. They also have not changed their mindset. They also think like banks. So they have to really reorient. And the primary requirement of any collaboration happening is, how do you change the way people think in the banks and NBFCs in terms of the digital adoption? It doesn't come simply because I use cloud, I use a private cloud, public cloud. Debate will come later. But have I reimagined the journeys right from the customer onboarding to the product development and product design is something I think which both NBFCs and banks have to think about very seriously. And that would facilitate in terms of digital lending adoption. But as far as the limited piece of collaboration, the collaboration, again, as I said, it is not only between the banks and NBFCs. I think NBFCs obviously are looking towards the banks for the capital. And there's no harm in it. Of course, the capital is with the banks. The trust element, what inherent in the banking industry here, generates the amount of deposits where the capital is adequately available with the banks. But the NBFCs have a nimble-footedness and the connectivity at the last mile to make the collaboration successful. As I said, number one, they have to bring value beyond what I'm currently doing, right? If NBFC says that they will give the same way MSME lending, the way SBI is doing, I don't see any merit in collaborating with them, either in the form of co-lending, what Shachindra has mentioned, or in any form of collaboration. I need the NBFC to show me what are they capable of doing or better than I do. It not only in terms of underwriting and in terms of the collection. Again, this is another piece which in the whole digital lending system, we sometimes underplay this digital collection part. Either it is digital or physical. Unless you give me a solution that yes, I lend better, I collect better, and I have a technology to do it, both of them better than what you are currently doing in certain areas, let us collaborate. I think this is what is going to enable us, either with NBFCs, and so is the case with fintechs. I keep telling the fintech, see, I'm not looking at the scale. You can never match the scale what SBI or many other banks have. Obviously, but you have to bring the efficiency, both in terms of data collection, engagement with the customer, CX, collections. The whole piece you have to tell me that, I would eventually reach your stage. I have, in the interim, I need some partnerships. But you have to come with value propositions beyond what I'm currently doing. And replicating what I'm doing, I'm not interested. This is what I keep telling both NBFCs and the fintechs. I hope I clarified what exactly the bank is looking for.
Many fair nuances there, Mr. Shetty, sir. Very fair nuances. I also think at some level to your last comment, even if every institution becomes digital, there is still merit in focus, and what smaller organizations or niche organizations can bring in is to live with that focus and develop that empathy and those products. So I think the stable point is going to be a point where there would be a fair bit of specialization which is available, and then there is of course a fair bit of scale which is available. Does that
absolutely. I think one more thing, Vivek, I would like to say that banks, large banks and large NBFCs also have cost rigidities. So you, particularly banks will have, the pay structures are determined, and there is nothing which I can pay less. The differential pay structure with the large banks is much more difficult. I think this kind of flexibility what NBFCs and fintechs have should be leveraged. Obviously, I think there is enough space for everyone. You are very right in saying that there is a last mile connectivity which the banks will be looking forward to, and in a very, very cost efficient manner. But that cost efficiency alone will not motivate me unless you come and tell me that I am capable of doing it in a better manner. And more importantly, again, one more point I would like to say, the collaboration also hinges on the fact that what is your governance mechanism. I would not like to be associated with someone where the governance structure is weak. You may have an excellent product, you may have an excellent technology, but you have to, or the NBFC or fintechs have to convince the major banks that they have the strong governance, which actually puts the customer at the center of their activities.
Yeah, absolutely. And RBI is also now kind of making the regulatory regime almost consistent. The recent guidance around it. Shachindra, I think this sets up very nicely for you. Where do you see opportunities for collaboration, and where do you see sense competition? And probably Shetty's remark also brought another sub question in my mind as to, because it's a moving market, it's a moving capability. And where do you think the moats, if I may use that term, would be sustainable versus transactional? Shachin, your thoughts on some of these observations?
Yeah. Vivek, I will try answering this in a very different way. So I think last week I was making a presentation to Mr. Shetty, and his first question was that what is the big hurdle to co-lending and why it is volumes are not picking up. So I paused, I thought about it, and I had a laundry list of things and troubles which we are facing. Not with SBI, we have but with because we have 9 banks now. But I defined it in this way. I said, in my generation, all of our marriages were arranged marriages, which means my parents used to find what is the caste, what is the gotra, what is the family, and whether my son and daughter would be able to gel with the family, and then my marriage got settled and finalized. Now we have a generation where I don't ever hear of an arranged marriage, right? Because boys and girls are getting together and deciding to get married. So I said, sir, have you seen Two States as a movie with Chetan Bhagat's novel, wherein think of a Tamilian girl getting married to a Punjabi boy. Now both of them have gone to US, educated there, and that's why they don't bother about caste, creed, gotra at all, and they decide to get married. But eventually in India, finally the families has to get together. So it is the Tamilian girl's father who is thinking of getting her married in a simplistic way in a temple, versus Punjabi boys' family saying we have to do a big bhangra and we have to open the bottle of whiskeys and champagnes. So here is where the collaboration is right now. The boy and girl, which is NBFC leadership, which is girl, and the large banks leadership, which is the bank, which is the boy, they have decided to get together. But now the families have to come together, and which is very, very troublesome, right? But eventually, if हमारे यहाँ कहावत है जब लड़का लड़की राजी तो क्या करेगा काजी. So given that boy and girl have decided to come together, families will eventually come together, and this is where the collaboration is happening. I have no doubt in my mind that eventually, especially for our segment of the market, for MSME financing, which is a little difficult to underwrite, the power of the data, its acceptance and other things would finally settle, and NBFCs will never be able to match the liability spectrum, what Mr. Shetty said. The trust in India is with the banking sector, which means everyone put money in the bank, and then money has to finally flow back to the markets. And that's why this collaboration would eventually play a role. Now, there are complexity around technology, the integration, understanding of this, but any change takes few years, right? I still believe that, the change of this collaboration at a pace which it is happening is even faster than what I expected. I'll give you one example. 95% of our MSME financing today happened through a data tripod, which only uses GST banking and bureau, right? We don't ask any customer about his balance sheet or income tax return. And there are 5 of the largest bank in the country who have adopted this method of underwriting. So actually it is odd that even in Bank of Baroda or in an SBI, in other places, for a customer walking into a branch of the bank, he has to file March 21st annual return, balance sheet and income tax return. But the same customer walking through NeoGrowth and going to an SBI or a Bank of Baroda doesn't require that. Eventually the bank would also change, but this is happening. Now, obviously we can be satisfied, dissatisfied with the pace of this, but this is happening, and technology and digitization and data analytics. So I always differentiate between heart and body. The heart is the data analytics and body is the technology piece. That would make this journey much more smoother. It took us almost 8 months to completely digitally integrate through an API with Bank of Baroda. But having done that, every next integration is faster and easier. And that you will see. So, finally, there'll be a bridge which will happen, and gradually Fintech plus NBFC would go more on the asset side, and the liability side would go on the bank side. And then the real beneficiary of this is the end customer.
Fair thoughts, Shachin. I think good anecdotal examples as well. Arun, your views on segments of competition versus collaboration?
Yeah, Vivek, I think it's definitely going to be cooperation. And I think it's not the cooperation only between banks, NBFC and fintechs. I think it's across the ecosystem. If you look at the way fintechs or digital lenders provide solutions to the customer, they leverage capabilities of entities which are not into financial services. Whether it's a credit bureau, whether it is a banking utility, or it is someone who is doing a crime check for you or a field visit, all that process is enabling the digital lenders or the fintech companies to provide the right kind of a service. But to my mind, the key issue is still the customer. The current process, the way it works for co-lending or a banking correspondent relationship is that it's not a frictionless process. There is a lot of friction in the process, partly due to the way the arrangement is structured due to regulations. Also, we're seeing a significant gap between the tech integration capabilities of various counterparties. So I think it can only pick up scale when this entire approach becomes a lot more customer-centric rather than institution-centric. And I think for that, the ecosystem still needs to, in my view.
Great thoughts. Harsh, your view?
Yeah, thanks, Vivek. I think Vivek, the question basically of competition does not arise, right? Overall, there's, like Setty sir said, there's no one in the country who can actually compete with SBI, right? In terms of the brand.
So just to replay it, I mean, clearly banks and NBFCs and especially banks are also creating B2C applications for credit and others, right? So I would presume there will be some spots, but I just wanted to rationalize that there will be some.
Yeah, sure. No, I think like Setty sir, Sachin and Arun said, right? Overall, basically the idea would be that again, I'll go back to the point of if we have to cater to 80-85% of the population of the country, right? We need to start with product, right? First, start with customer. Who's that customer? What kind of data points does he have? What kind of products do we need to design him, right? Is there the right kind of ecosystem, either in terms of onboarding, either in terms of underwriting through alternate data, or maybe overall collecting money as well, right? Overall, because finally lending is a age-old, centuries-old business, right? Which is 3 critical components: origination, underwriting, and collection. That doesn't change. Only that we are moving into a times where medium of doing it, mode of doing it, communication, exchanges is changing, right? Are all of us aligning to it? So I think I definitely feel that it's an age of collaboration. And like Setty sir said, we are a little bit maybe more agile. We might, because of a nature of enterprises that we carry, right? We have a little more appetite or risk capability to invest in newer technologies, right? Like adoption of account aggregator or India Stack for that matter, or designing and redesigning our customer journeys from end to end, right? So we currently are following a zero touch design, right? Where the customer, maybe we are currently at some 21, 22 clicks for a loan. We might want to get it to 6 clicks, right? Overall, when account aggregator and everything happens. So maybe that's the way we can design and work on those things. And those capabilities might take a little bit longer with the existing enterprises. And if we go ahead and build those capabilities, are training ourselves to newer models, newer data, newer algos, newer ways of doing business. And similarly, if we can seamlessly integrate with larger institutions and work with them, that could finally lead to a lot more conversion of customer, a lot more money reaching out to the end customer, and the benefit of the customer will be there. So from my perspective, it's finally the focus on journey of the customer himself, product that we are giving him. And like Setty sir said, right, there's no point in, again, somebody, all of us starting again a loan against property or a gold loan or a home loan, right? That in itself are products that have been catered to the population, right? Maybe even if you want to start that, can we miniaturize it, right? Maybe a home loan or a gold loan, even affordable housing, if the target ticket sizes are 10, 15, 20 lakhs, can we reduce that further, right? Based on just data, can we have a seamless journey of that? So something more on, if you offer, I think collaboration will be a good need, and with collaboration everybody plays on their strengths and the ecosystem receives benefit of it. Vivek.
Perfect, Harsh. Nija, I think we spoke a lot on collaboration, and the industry and the work which I have also been involved in is super comfortable with the concepts of open APIs, and a lot of these co-lending, co-sell, sourcing, digital sourcing, fintech partnerships, everything is happening through APIs. So industry is, I think, adopted it very well. But where do you see are more opportunities as we move forward?
I think one of the great opportunities that open APIs and microservices architectures create is an ability to be agile in terms of product launches. And both Setty sir and Harsh kind of talked about it a little bit, but I would like to use an example of Thai Credit and Retail Bank, TCRB. They're a thrift bank focusing only on MSSC, medium and micro and nano businesses. So they kind of specialize in that particular area, and they created an open banking platform which allows them to iterate fast and launch their products quickly. They were actually much like some of the examples we discussed before. It took them 9 months to launch their open banking platform, but then since then they have been able to iterate very fast. They have launched payment products as well as revolving loan product, and this revolving loan product enabled the fintech players to actually collaborate very quickly and easily with the bank, because the bank is effectively leveraging the repayment history and pushing customers up the ladder on the credit score. So where having the open API and microservices architecture kind of becomes a functional backbone for launching agile products. And that's probably the next step of evolution, in my view.
Thanks, Nija. That was pretty apt. Probably moving to the next segment, and already we heard where I want to push our inquiry is on data and analytics. We spoke a lot about AI and importance of data in the whole journey. Probably, Shachin, this time I'll shift around the order, start with you. You did call it the heart of the whole enterprise, probably most passionate about it. So what would your opening remarks on where do you see the value and where do you see the risks, and what should we be cautious of?
Yeah, absolutely. So as I said, I was trying to differentiate. So when we talk about digitization and technology, there is immense focus on the front-ending solutions, right? KYC, video integration, onboarding of customer, how to, all of that, which is all fine. I would, think of this pre-2008. If you were to go to a Chroma store or any retail store and buy a fridge, and you wanted a loan, it could have taken you anything from 3 days to 15 days. Right? Now, today you walk into a Chroma store and you want to buy a fridge or a TV, you can get a credit in 30 minutes maximum. Why that has happened? It has happened because the heart of that underwriting is driven by your mobile number and a bureau score, and there is a trust on the predictable default analysis of the bureau, and every lender does some more added analytics on top of that. For large lenders like a Bajaj, you might be an existing customer, so your existing trade line would also support that underwriting. And that is what I call the heart and soul, that as more data points, and when I say data point, it's not the Facebook and Instagram and what you post and what you write. More underwritable digital data is getting available, and how do you utilize to bring efficiency in credit underwriting is the big role it would play. I'll give you one single example. Now, as you know, that 7 years back, you go to a SME and say, "What's your turnover?" He will say, "मेरा सारा turnover कच्चे में है." तो आप भेजो credit officer को, आके चालान से add कर लेगा. उसको बोलो, "सर आपका खर्चा क्या है?" They will say, "Sir, all of my household expenses also in my balance sheet, so please disaggregate that." Now we have moved away from that because we pull the GST, and GST gives you a quick turnover analysis. Then you pull, take the banking, we give you the cash flow analysis. And you think of an MSME whose turnover has grown by 100%. Now, how do you identify that whether it's a fake turnover or it's an actual turnover? Now, when the electricity bill through an API is digitally available, your system simultaneously can fetch the electricity bill and compare that in past, if the electricity consumption as a ratio to the turnover was X, if the turnover has gone up, whether electricity bill consumption has gone up or not, and if it is not happening, it's a fake turnover. That is the heart of digitization, which will play a role. The front ending of it, everyone with a lag effect would be able to do it, right? Some would be faster. So, incumbents would take little time because they have to change the existing process. Most of the fintechs would be able to do it faster. But the real power of taking it to level of the consumer is to figure out what, machine can do faster, superior, and more predictable what humans cannot do. Finally, it is the human mind which has to make the machine learn what it has to see. But speed and agility at which it can be done, it will be very different in coming decade.
Absolutely, and probably some subtle points there. A lot of this is possible because of data availability, because of some common data rails, and we'll want to go into details of it. Harsh, if I bring you in again, you are a startup. I'm sure data and tech would have been the foundation stones. What are your learnings on where AI has been used, and where do you see the potential or the risk?
Yeah. No, thanks, Vivek. I think Touchwood, when we started out our journey, right, early days, 2013-14, one of the critical pieces that came out from our interaction with all the mentors was that data is going to be the key, right? I think we started out, and those were the days where account aggregator was still not there. We didn't have GST data, or like Sachin said, the tripod of data available as well, right? But I think, like Sachin said, I can proudly say that if next year there's almost 30,000 crore co-lending happening, we would be doing 6,000 crore out of that. So I don't know. Our plans are, so we might be 20% of that. And Touchwood, again, we would have almost 3,500-4,000 crore of that going to nationalized banks overall, largest of the banks. And Setty said, I'll seek your time for SBI as well. And there are 4 or 5 nationalized banks already live with us who've done that. So I think data, Vivek, we are all realizing that data is the key, right? I think, and the efficiency on data front, right? Like whether you're building the algorithms on XGBoost and those kind of techniques. I think we all feel like data is abracadabra. It's not actually that, right? It's like it's a very trained mechanism where it's an iterative process where you run data, you build on it, you again iterate and build on it, right? I think if you look at it, all our investments or investors who have come, right, we've been evaluated by an external agency, whether it's from US, Europe, anywhere in the world. They normally calculate K score, Gini scores. They normally calculate efficiencies of our data models, right? So if I am giving out an automated score, right? If my today and my automated score basically would be probability of default, loan amount, interest rate, and tenor for my borrower, right? With 97% accuracy, my models can predict in a regular tenor what's the probability of default. And we've been across 7 years of our journey able to clearly exhibit all of that, that this is the model performance and this is how we have actually performed, right? So we've reached to that level. I think maybe calling it artificial intelligence, deep learning might be restricting it, but I think the model and data. And like I said, right, a lot of times we all don't realize what the underlying problem of solving for the ecosystem is OpEx, right? All of us struggle with that, the OpEx are too high. When I say miniaturization of products will only be possible if it's done by data. and done by data, and basically we go ahead and solve for it through data. And data techniques have evolved a lot overall in last few years overall, and I think that can be wonderfully done. And that's where again the agility of fintech startups overall can come per se, where we can work on them. Maybe we can hire the right kind of talent as well and deploy and work on those. Vivek. So I think the future is data driven, right? And I think the quantum of data that's available now for us borrower, right? And maybe it's either so like we said, we have bureau application data, banking data, but there's an external whole host of external data as well. It could be if you rightfully get consent for his SMS, if you rightfully get consent for his social, if you utility, mobile, and payments data and a lot of stuff. We in India currently have all the 60% that I'm talking to newer age. They might not have a prudent financial statement, tax returns overall, or other stuff as well, right? I'll give a simple example. A lot of interactions with a lot of players that we have currently, like co-lenders, is that March 20 and March 21 both were tough years, right, for MSME. They don't represent the actual financial statements. And if you look at financial statements for those years, they would be on date performance. But if you had a shutdown for 4 months, if you didn't have, if you had COVID 2 and 3 in 1 year, how do you evaluate his last 3 years financial statements and go out and give him money? That's basically you underwrite his cash flow. That's basically you do it through algos who understand those kind of nitty-gritties rather than relying on humans. So that solves it. I think that's where we are there. And I think Vivek, touchwood, the kind of stage we have reached in the country, right, in terms of ecosystem development and everything and kind of data available right now, it's very encouraging right now.
Awesome. And I think if we want to continue on this new to credit journey and get into penetration, you require such innovations both on data availability and algorithm side to make it possible.
Yeah, new to credit is the segment, right? I think otherwise it's the existing institution, largest of the banks and institutions are well capable of serving the top tier in the country, right? It's new to credit, right? It's new to credit who is like less than 3 years vintage, thin bureau or less than bureau score, maybe not owning a residential property, or maybe going from a small town to a large town for working, starting up an MSME over there. That's the kind of population we all need to cater to, right?
Super. Nija, if I bring you in a little early into this segment of the conversation, because again, in our experience, we have seen cloud having a lot of impacts, but AI is one tangible impact. That's one capability area where on-cloud capability clearly has superseded what has been available off-cloud, and especially type of analytics requires sudden like elasticity, which again, cloud provides. So we have seen a lot of potential with it, but your vantage point, where do you think it's being used well? What more can be done?
Yeah, definitely. Handling data, and data is the new oil, as they typically say nowadays, right? Data is the new oil. But typically, what I see customers doing is they want to improve, use data for not just for getting new customers and doing better credit scoring, but also for operational efficiency. And one of my favorite examples is actually Madura Microfinance in India. They provide loans to self-help group of women in 5 different states of India. They actually moved to AWS. They use AWS. They moved their entire infrastructure to AWS. But the highlight of their story is actually their data lake. And the reason they moved to AWS and that they use AWS Redshift for their data lake is they want to be able to disburse loan at what they call as point of need. If you disburse it too early, there is always a risk that the woman will end up repurposing those finances for something that's not the intended purpose of the loan. And if you disburse it too late, then they might have already borrowed from the market, from the loan sharks, and you end up with a significant risk of non-performing assets. So they use the data for customer segmentation, customer profiling, as well as they use data for real-time access to critical decision-making data points. And that's how they're able to disperse loans at what they call as point of need. Madura's field agents actually experience a significant improvement in operational efficiency and productivity after leveraging these data-driven insights. And in terms of results, Madura was able to achieve 50% year-on-year growth for 3 consecutive years, and they managed to keep their NPAs also in check. So while I agree that the digital native businesses like LendingKart are probably have been early adopters, but Madura has been an established business relatively. What you really need is you need a right use case to which you want to apply data and analytics, and then use the right tools for the right job to make the most of data. And customers, large, small, all of them, once they have the right use case and right tools, they actually can pretty quickly make the most of the data they have.
Super, Nijam. Let me pick up the other facet of that question on use of AI and analytics, which is data availability, need for data rails. Probably, Arun, if I start with you, where do you see public data rails, or like we heard some examples? Where do we think it's working well? What's your read of development of Open, and what would be more which might be needed for us to be getting more data in the ecosystem?
Yeah, Vivek, my view is that the account aggregator and can play a similar role what credit bureau played for consumer lending in 2008. Right, it is a very transformational initiative. Right now, it's still early days. We have few entities, including company like us who are account aggregator certified, but still we yet to see the scale. And but in its mature state, clearly see Open and aggregator working together can transform the SME lending business.
Thank you, Mr. Shetty. Your view on Open and open data rails?
So far, I think most of the large players, NBFCs, banks, have been efficiently building the models to lend to existing to bank customers. I think we have done fairly well on the ETB part. The different levels of adoption, of course, but I think directionally everybody is moving towards leveraging the data on the existing customers. So when you want to move beyond a point, like ETB customers, either the limited opportunities or you want to diversify the opportunities of lending, particularly new to credit and new to bank, the various data sources are important. But even today, of course, there are structured data, unstructured data. Everybody tries to build into the system. But much of the processes are not frictionless in the sense that today, if any of the customer approaches an NBFC, first thing they would ask, go and get a bank statement, right? While you have the ability to analyze the bank statement through whatever technology what you have, but procuring a bank statement from an open system is still a challenge. So those issues obviously will be addressed through account aggregator model. But I have one concern in the sense that if you limit the account aggregator framework only to the banks, it is not going to be really useful, right? And many a time what happens, what we have seen that the profile what you are trying to build only by way of a bank statement is very, very limited. They have different classes of investment. They have insurance, they have mutual funds, they have credit card activity. How do we bring all these players into the account aggregator system to make it a little more comprehensive? Otherwise, we are still will be struggling. You just bring the banks. At the most, what you may achieve immediately is your KYC related activities can be better taken care of because the customer can authorize NBFC or NBFC to ping the bank system to get the KYC. But beyond that, if you have to really make a profile, a financial profile, a credit profile of a customer, I think it's very important that all the players in the financial services space have to be brought into the account aggregator system. I think this is one thing which this my view. And as far as the open credit, particularly for the MSMEs, this invoice financing and all, I think while it will be a great enabler, what is preventing many of this invoice financing on the TREDS platform? So we need to understand why the TREDS is not scaling up the way it is expected to do. What are those pain points? How the large scale participation happens? And also you must remember many of this invoice financing happens at various levels. it happens under the supply chain financing, it happens on the bank cash credit financing. So the multiple ways of raising credit, probably one of the dampeners, why there should be an invoice to be funded. But it definitely makes sense for small players who are not able to get a institutional credit today in a very seamless manner. The OCEN can be a solution. But I think, as I said, the ecosystem will be much better if all the players are brought into this account aggregation.
I would agree with you, sir, and probably to even expand it further, and that we have seen in our fintech research, a lot of growth comes when we get non-traditional financial services into this fold, both from a data and ecosystem perspective, like electricity bill we just spoke about. So I think probably expanding that coverage is going to be key. I would like to invite Sachin, your views on this point on open data, OCEN, and the point which Mr. Shetty raised.
Yeah, so Vivek, in fact, we implemented India's first token framework. So for government e-marketplace, Gen Sahai platform along with iSpread, we piloted that, integrated that, implemented, and it's one live. I think the token is just one small step in lending, which is highly friction oriented. So if you compare with capital market, the reason why trading in stocks is a very efficient system because there is a stock exchange wherein everyone connect from a retail buyer of a securities to a broker to a clearing agent, everything, the information is hosted on an exchange. Now, when it comes to the lending, it's a completely fragmented system, right? So that's the point number one. And probably OCEN is just very one simple small step in that direction. And OCEN, when it was visualized, it was not just visualized for a, today, account, when we talk about OCEN, it is account aggregation, which is nothing but fetching bank statement, right? But as you know, GST now has been defined as regulated because Ministry of Finance, if DFS is the regulator, and finally that can also be integrated to account aggregation. So as every other utility and services, and then so the imagination of what OCEN can do is obviously very exploratory. But the challenge, what has happened over the last 1 decade or 2 decades, in country like India, transformational change without regulatory pressure or change doesn't happen. Like we have said, healthcare, private sector will go and do it. Roads, private sector would go and do it. But there are certain things in India which only policymaker can make it happen. So OCEN is also in that domain wherein there is one licensing regime for account aggregator license has been put. But when it comes to the OCEN, it is public-private partnership. So you have an iSpirit which is going around and saying, okay, we'll do it on a voluntary basis. Let's do this, let's do that. And that's why it's slower. And also to some extent, think of this, large incumbent, if you go to them and say their biggest competitive advantage of banks is today their customer base. And if that customer base information is available to everyone, and then that would be utilized to give credit, eventually there is a natural resistance from bank to why we should do that, right? So there has to be an incentive for all. And that I think so, if you have to do India's biggest sandbox, if the regulator should do it around this, how every credit information across every value chain has to be put on a platform so that real innovation can come from there.
Great, Sachin. Harsh, any quick thoughts? I want to do one last summary, query, quick one to everyone, but any quick comments?
Yeah. So I think I agree to Setty sir a lot in the sense that AA and OCEN both are pretty much in the build-up stage, right? AA far more. But I think for us to serve the larger population, right, all the underserved people that we want to serve, the quantum of data, quality of data, the realm of data that is available for them, right, has to be like, and like Setty sir said, basically it's not just banking data, but the insurance data, investments data, housing data, ITR, or you say utility data, social data, all of that. And I think with India style, we've got a wonderful consent architecture or a format of consent architecture. If you can just go and develop on it, build on it, where the customer actually becomes the owner of his data and at his willingness, go ahead and share with people who can use them, use it to give him rightful financial services or other services. That would be wonderful. I think we are at an early stage overall in that build-up, but all of us, if we work together, I think that will be critical for finally, one, accessibility and usability of that data to serve the customer.
Makes sense, Harsh. I think we're almost on the hour. I got one final query, and probably we'll go with the sequence we started with. So question is, and I'll nuance the question also and then open it up. The question I had in my mind is, have we reached innovation saturation? And I know it could be an easy question to say, no, we never have saturation, but let's do it in a measured manner, because last 3 4 years you could argue that a lot of product innovation has happened, a lot of varieties are available, a lot of technology innovation has happened, a lot of partnership has happened. So when I ask that question, it is with mindshare of saying, is there enough for us to now build and scale it further, or do we need to keep on going on experimenting to find solutions to some problems we have not found? So it is in that context. Mr. Shetty, if I start with you, yes or no, and quick view on why.
So obviously, no. I think there are quite a few areas which require innovation. A couple of things which I always keep talking to fintechs who come to me is that what have you done in terms of most underserved area of agriculture and farmers? I think we still have not touched. While we do have as large number of agri fintechs in the country, I think the solutions are not enough. Number two is that despite whatever innovation we have done in the unsecured lending space, secure lending is still nascent stage. I don't even have a digital land record. I don't even have what the most of the mortgage revolution which had happened in the Western countries is an account of title insurance, right? Which has facilitated mortgages across the lenders' movement and refinancing, which happens in a large scale because there's a title insurance. Today, the biggest risk for secured lending is that I'm not very sure about the title. So, what kind of innovation can be brought in the title management? What kind of digitization we can do on the land records across the country, and how do we utilize the data? While some work is going on, I think there's a huge amount of space which is left untouched there. And then similarly, on the credit profiling of the farmers, I keep talking everyone, do we have a credit score for farming community? The way we have, any consumer can have a credit score, but poor farmers, other than having a crop loan, they don't have anything. Now, so many of them don't even take crop loan. How do you build a credit profile and start lending to them? I think these are some of the innovations which they can do. But I think, and there are quite a few innovations we are required to do on the risk management. I think Shachindra has mentioned in terms of, I think as you scale your lending operations, the biggest challenge would be that the consumers also start gaming the system, right? If the pre-approved loans, I see a trend where they build the credit profile, they build the account statement, and if you're purely depending on that without having a proper risk management practices, you will be taken in. I think this is another innovation we have to spend. Today we have been spending largely on the CX part. We have to now move towards risk management and some of the underserved, which I mentioned.
Great point, sir. Shachindra, Shachin?
So, as you rightly said, it's very hard to, nobody would be able to say that innovation is over. But it depends where we would like to be. As a lending institution for small businesses, I would like innovation to reach a point of saturation wherein our system should be able to predict three things: the intent, the eligibility, and the ability. Which means that when our system look at customer, they should be able to define its intent. They should be able to see whether he is eligible and also be able to predict what his future would be. Right? Now, if you do out in these three parameters, I think so we have 2 decades to go where the innovation would end.
Nice thought. Nice thought. Arun?
Yeah, I see. See, my view is that while they will continue to do innovation, but there's a lot of opportunity to do renovation, right? What the challenges we have in our existing, framework, whether it's around data or ecosystem. So renovation, innovation will go hand in hand over the next few years.
Nicely put. Harsh?
Yeah, Vivek, I think it's I would like to suggest that we are just the tip of the innovation, right? I think there's still a long way to go in terms of what and how we can deliver. See, from our perspective, it's a customer, right? If every customer finally based on his data and everything, if he can have a personalized product ready for him, yes or no, whatever, right? If he's not eligible, we don't give him if he's eligible. That's where I think we all have to reach, where everyone can get his due in financial services overall. And I agree to Sachin. So basically, it's 2 decades away. Right? It's still gonna take a lot of time for us because we have a large population. So innovation will have to continue till then.
Super. Nature?
Yeah, definitely. Innovation. No one can ever say that we have reached at the ceiling of innovation. I agree with all the panels here. At the same time, if we think about accessibility, availability, and affordability of financial products, I believe that there are enough tools in terms of technology that are already available, but not necessarily embraced and adopted by financial services. So while the innovation will continue to occur, it's equally important that the adoption of existing innovation takes place to deliver Atmanirbhar Bharat in the end.
Great thoughts, Nature. Let's make use of what we have also. Innovation, renovation, lovely set of comments. Thank you so much, panelists. Didn't realize when 1 hour passed. Was a very engaging conversation. I wouldn't try to summarize. It was very complex, and I hope the audience had a good time. Isha, back to you.